Let's bring in our market panel. Joining us now, Scott Wren from Wells Fargo Investment Institute and Stephanie Link from Hightower Advisors. Stephanie, do you buy it? Like literally, this rally post-Fed right ahead of the jobs report and all these earnings this afternoon. Should investors believe that this is solid?
Yeah, I do. I actually think we are set up for a rally into the end of the year. We've already had a couple of days, nice days. And I think the laggards are going to likely lead us, which we saw today, right? All the tax loss selling companies and stocks that got kind of washed in that whole theme. They really exploded today, for sure. But the reason I'm positive really is because the data today was really the sweet spot for the Fed and for what we want. We want inflation to come down. We had unit labor costs come down. We had productivity, the best in 3 years. And we also know PCE has also been coming down. So inflation is doing its job in terms of coming down. Still have progress to go, but it's good. And then growth. We're not growing 4.9% like we just grew in the third quarter. We're going to slow, but I think we're going to be able to do 2%. And that is good for earnings. And by the way, earnings have been better than expected. Seasonally, this is a good setup time, right? And I think that there are a lot of people that are off foot right now, right? A lot of negativity out there. Sentiment is really pretty crummy. So I'm a buyer, and I've been buying the last couple of weeks.
Scott, we've got the T-Rex of the mega caps, Apple, reporting tonight, but it was the Russell 2000 that was up 2.5% today. Is that encouraging?
Well, and normally it would be if you thought we were early in the cycle or halfway through a recession or a slowdown, something like that. And I'd love for Stephanie to be right, but when we look at it, we're not convinced that the Federal Reserve is finished hiking rates. We think earnings estimates, whether it's the fourth quarter for all of next year, are way too high. Credit conditions are tight. Yield curves are inverted. I think right now the market's going to struggle to really probably get much above 4,400 if we bounce here. But certainly between now and the end of the year, we think it's going to be a little bit rougher. We have a year-end target out there of 4,100. So we're looking for recovery and a better market into year-end next year. But I think over the next couple of months, we're going to have a tough time.
Well, we did have this quick move from 42 below 4,200 back up above 4,300 just today. I mean, 43.18 is where the S&P finished the day. 1.9% gains. We're up almost 5% on the week now, just thanks to the last 2 days. Scott, I mean, rate reprieve, peak Fed possibilities here. You got dampened volatility. You got favorable seasonality. And you got the reopening of corporate buyback windows. Just a couple of things that are being pointed to for this rally right now. What would it take for you personally to have more confidence in it?
Well, I think we have to have some more confidence that the economy is not going to slip into a recession, which we do. Now, has timing that recession been pretty difficult? It has been. But from our perspective, in these opening months of 2024, you're likely to slip into some sort of a recession. That's going to take a little bit of time. We're calling it moderate. So I think unless our economic outlook changes, you know, these last couple of days, they're great. I'm typically a glasses half full kind of guy, so I want to be positive. But I think these last few days, this has been a lot of short covering, not only in stocks, but in the bond market as well. I think we're in for some pretty volatile days. And of course, initially this week, people wanted to get squared up for are in the position they wanted to be for the FOMC. Now today, they've got to try to get positioned up for how they want to go into this number tomorrow. And I will say that if it's anything like the last couple of Fridays, traders, which we know is the bulk of the day-to-day volume in the market, you know, they're not going to want to go home with meaningful long positions because God only knows what's going to happen in the Middle East over the weekend. So you have all these dynamics going on that's going to carry us through this week.